Hello and welcome to another video about how to and when to take profits in cryptocurrency investing. And as in the videos before that I did, this is just one strategy. And again, there is no one size fits all solution to it. You know, there are different strategies that work for different people depending on their personal situation. So I can't really recommend one particular strategy for profit taking, and there is no perfect strategy for profit taking. Different strategies work for different people, which is why I decided to make a playlist about profit taking strategies. And this is the 5th video that is part of the playlist. You can find a playlist if you wait until the end of the video. You will see a link to the playlist, or you can find a playlist on my channel page as well. Now, this is about profit taking, and in this video I really want to talk about not taking profits at all, or at least not in the short term. It sounds a bit strange, but it's called hodling or long-term holding, also called hodling. And you know, long-term holding just indicates that you basically wait until your investment has reached a level that could be life-changing. Okay, so let's say here, for example, on the Bitcoin chart, you invested back here in 2016. Prices were really nice back then. You know, we talked about really low prices back then, around $300-400. So if you wait until today, for example, you know, you wait your 4 or 5 hodler years, you know, long-term holding years. 4 to 5 years is generally like what people say. Whenever someone has invested in Bitcoin and has held it for at least 4 years, they've always done well. They've always been in profit. Even if you invested at the peak of a pump, you know, at the blow off top, after 4 years, always you were good. Yeah, that is why many people say long-term holding, you know, if you invest really in the long term and you have money to invest, and you maybe have money already in other investments and you put it into Bitcoin or in other cryptocurrencies, long-term holding is for many people the strategy to go to, you know, to use, because they don't want to have the stress of looking at moving averages. They don't want to deal with it. They just want to hold it. They are not bothered about the ups and downs of the market. Maybe they do dollar cost averaging. They dollar cost average in. They buy something every month, regardless of the price, and then they just hold it long term. So how to do that, or why to do that? There's one reason people do that. One reason is, for example, you can stake your cryptos, not Bitcoin. Well, there are ways to stake Bitcoin as well, and if you want to know how, let me know in the comments. But there are many cryptos, like for example Cardano, can be staked. So there are stake pools that you can stake your cryptos, and I've made videos about how to do staking before. But basically what you do when you hold your cryptos long term, you can, for example, stake them and earn interest. So you earn interest, basically staking rewards on your cryptocurrencies. Here you can see stake pools that you can delegate. For example, on the Cardano blockchain, you can delegate your ADA coins to stake pools, you know, and basically they will delegate, they will stake them for you, and you get rewards from them. So that's just one way of doing it. For different cryptocurrencies, there are different ways of doing it. I've made videos, as I said, for Cardano. But if you then hold your cryptocurrencies like Cardano long term and you stake them, you're not bothered about price changes, you just keep them staked. You just earn rewards constantly, and these rewards add up. It's pretty much like earning interest on interest, because you get more staking rewards. They get onto your wallet. On top of these, you stake them as well, and then you get more interest on them. So over time, you know, you really get this parabolic increase of your rewards. And that is why many people just hold it long term as well, because they don't want to sell. They think long term, the price will just go up to, you know, life-changing prices. For example, here, when you bought down here, even if you bought down here at 20,000, you know, even then you could potentially have made a life-changing investment. Because if you then, let's say you buy long term, you bought at 20,000 back here, but then you kept buying because you dollar cost average in, that investment over the years will have led to a life-changing portfolio potentially. Because now at this level, at 60,000, if you bought all the way down here, that would be ridiculous, you know. And that is why many people just hold long term. I myself, I've got a long-term holding portfolio as well, but I also have a trading portfolio. Yeah, so I found that is a good way of doing it, of splitting it, because, you know, you need to think about the future as well, or at least I do. I'm sure you do as well, but I can't really give recommendations. I just talk about what I do here. So when, for example, I put money, or I put cryptocurrencies in my long-term holding portfolio, these are stored on the hardware wallet. I don't really want to touch them. I don't really think about them. I just add my cryptos onto my hardware wallet over time. And I hope, in like 3, 4, 5 years, they will really have led to life-changing. This portfolio could be potentially life-changing. Or even if I go further in the future, 10 years, 15 years from now, because we need to think about our, potential retirement, or just what do we do later? We've got children, at least some of us, and things like that, having mortgages, all sorts of things. So that is why I think the long-term thing is one big issue, one big thing. But also I want to be able to do some nice trades in the short term, which is why I've completely split the two. So I've got a larger long-term holding portfolio, which just grows over the years. And if the price drops from here, if we go from a bull market to a bear market, I'm not worried, because I see the investment as, for example, as Bitcoin, as Cardano, not as dollar value. Maybe in 4 or 5 years I will look at that. But then on the other hand, I've got the trading portfolio in which I'm more actively engaged. Found that a really good way of doing it. So, and when then doing the long-term holding, you're really not thinking about selling at all. So, we've got this stock to flow model here for Bitcoin at least. And to be honest, I refer to Bitcoin here because it is pretty much still leading the market. That might change at some point, but back from here when it started, where the price was at a few cents, you can see how the basically here this sort of the brown line is basically the predicted price based on the stock to flow model, and this will in the next few years will actually it talks about a potential price of 850,000, maybe even 1 million. And just because it's finishing here 2028, it doesn't mean that basically the stock to flow model is finished. It will just be continued, and the price, at least the predicted price, will go over 1 million for Bitcoin. These are prices we can't even imagine today, but it has always been very accurately. So actually the colored lines here, that is actually the Bitcoin, the actual price. It was always very close to the predicted model. So that just tells me that Bitcoin still, even especially in the long run, can really change a portfolio, could help you to make life-changing changes based on the value of your portfolio. And that's why many people say, long term, the price will go up anyway. And we are still very early days. So that is why many people decide to really hold it long term. And you can see that the price development in the past anyway. I think in a few years, it will probably look like that. We're done here and the Bitcoin price will be somewhere up here. And then I think, I'm at least happy about my long-term holding portfolio, that I didn't really sell it all and then try to get back in and so on. And also, you need to remember, whenever you sell something, it triggers a tax event. And I can't really talk about taxes because they are also different in every country, but it always triggers a tax event. But if you at least hold long term, you can, the price goes higher and higher and higher. And at some point, then you can think about taxes then in 5, 6 years. Don't need to think about it now. And many people just find it easier, also from a mental perspective, psychologically, to really have it there long term, and also have something in the background which is growing continuously, pretty much like your pension maybe. And that's why many people just don't think about selling it. They just want to hold it, and then maybe in 5, 6 years, when Bitcoin has reached 1 million maybe, then think about selling it and putting it into other investments or paying a mortgage off or things like that. And maybe never sell it, That's the thing. So that is one strategy, not actually selling it at all, but staking it and gaining interest and letting the portfolio grow over time, and maybe selling it in the future. That is one more strategy. So you don't need to sell it. I just want to say that. But I've talked about other profit-taking strategies already, and I will make more videos about different strategies going forward. If you want me to do more, let me know in the comments. And hope you liked the video. If you did, please smash the like button. And if you want to follow me on this crypto journey, then please subscribe. Thanks a lot for watching. Bye-bye.